Today, Bitcoin prices pop as WisdomTree and Invesco get in on the Bitcoin ETF rush. We break down the price tag on the FTX bankruptcy fees so far. And Zac Townsend, the CEO of Meanwhile, weighs in on institutions moving forward with crypto projects despite the SEC crackdown. Welcome to CNBC's Crypto World. I'm Tanea McKeel. The price of Bitcoin has surged today as financial institutions from BlackRock to WisdomTree continue to give their Bitcoin blessings. By noon Eastern today, Bitcoin traded close to $30,000, Ether traded above the $1,800 level, and Solana rose by nearly 6%. Sentiment has been high in crypto since late last week when BlackRock filed an application for what would be the first ever spot Bitcoin ETF in the US. Sticking with the push into crypto from financial incumbents, for our top story, two more institutions are now getting into the mix, WisdomTree and Invesco. Yesterday, WisdomTree filed for the WisdomTree Bitcoin Trust, requesting that the agency allow it to list its fund on the CBOE BZX exchange. The firm's head of digital assets told us in a statement today that it is a, quote, firm continuation of our stance from the initial filing based on WisdomTree's extensive experience in ETFs and our belief in the power of transparency and putting out products that meet high regulatory, compliance, and security frameworks that lead to success for investors. WisdomTree had previously filed for a spot Bitcoin ETF but been rejected by the SEC. It's now been 10 years since the first ever attempt to get one through. That came from Gemini's Cameron and Tyler Winklevoss, and the SEC still has yet to let one move forward. We also reached out to Invesco about their ETF plans. They said they're working with CBOE to get a Bitcoin ETF listed on the exchange. These moves come on the heels of surprise news from BlackRock last week, which filed its own Bitcoin ETF application just about a week after the SEC sued two of the biggest crypto exchanges, Binance and Coinbase. That's left many investors wondering about the timing of their application. Next, Canada is warning that some crypto websites are claiming to be authorized by fake regulatory organizations. The Canadian Securities Administrators, or CSA, issued this alert yesterday, noting that in an effort to appear legitimate, the purported trading service providers claim they are certified by a fictitious authority or that they are members of a dispute resolution organization. The alert added that the websites of some of those trading services include links to these fake organizations, which have their own websites. CSA encourages investors to independently confirm the organization exists and check with its list of registered trading platforms before investing in crypto. Finally, FTX's bankruptcy fees have already topped $200 million. That's according to this court filing from yesterday, which noted that lawyers and other professionals already racked up nearly 35,000 billable hours by the end of January. The documents reveal that 46 of the attorneys assigned to the case charged over $2,000 an hour. We told you last week that prosecutors agreed to withdraw 5 of the 13 charges against Sam Bankman-Fried, including bribery, for now. However, prosecutors asked the judge overseeing the case to schedule a second trial early next year on those 5 counts. And, of course, another trial would mean the price tag gets even higher. All right, back to big financial institutions' push into digital assets for our main story. Crypto World's Jordan Smith spoke with Zac Townsend, the CEO of Meanwhile, the first life insurance provider operating entirely in Bitcoin. Townsend gives his take on institutions moving forward with crypto projects amid a heightened crackdown on exchanges in the US by the SEC. Take a listen.
All right, so with everything going on in the background, I feel like I have to start with the current state of the crypto industry. I mean, you have the SEC's crackdown on crypto exchanges, you have renewed scrutiny around whether certain tokens are securities. But despite that, you have BlackRock saying that they're going to push ahead with this proposal for a spot Bitcoin ETF, something that hasn't been successful in the past. What do you make of that decision from them? What does it sort of say about the environment for institutions right now?
I think it's a huge milestone for the space. And I think it's showing that not only is there retail interest in crypto, but there is serious institutional interest. BlackRock, obviously the largest asset manager in the world. They have, I think, a 575-1 record of having their ETFs approved. So I think it's very likely it's not that they know anything that we don't know. I think they've looked at the past applications for spot ETFs. They've seen what's worked and what hasn't worked, what the SEC's response has been. And they've taken steps like setting up a surveillance agreement with NASDAQ, which basically is a way to see all the trades, the order books, to make sure that there's no market manipulation. So I think they're taking the steps to really address the SEC's past objections to spot ETFs, and it's very likely, that they believe they can be approved, and whether they're approved or not, I think it's a really good sign for the space. At the same time, you're seeing, EDX, which is backed by Fidelity and Citadel, come in and actually really directly try to address the SEC's concerns. They're only trading Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, which I think is what they've analyzed to say, like, those are the absolute not securities crypto tokens. So I think that's also an interesting and bullish development. And obviously, we'll see if the SEC's case against Coinbase in particular is successful. I think Coinbase has obviously, over the last week, done everything they can to publicly go out there and say that they don't think the SEC's case has merit. So I think it's an exciting time in the crypto space.
Yeah, you mentioned EDX. We've talked about it on Crypto World. And to your point, it is interesting that they picked specific tokens or cryptocurrencies that don't seem to be facing any scrutiny from the SEC. And I'm wondering, do you think other exchanges that are wary of what's happening from the SEC or wary of potential legal ramifications from listing other tokens might follow suit? Do you see a situation where they might pare down the listings on their exchanges and say, we're going to focus on the ones that we know our commodities are less worried about that scrutiny around securities?
Yeah, I think that is a pretty interesting and likely development. I think the SEC is saying two things. They're going after Coinbase and Binance and others and saying, like, hey, you're unregistered securities exchanges. And what would it take to become a securities exchange? Well, what it takes is sort of what EDX is doing, right? So only trade things that you either think are registered as securities or aren't securities. And then also what EDX is doing is really separating out, like, the custody piece from the trading piece. And they say they're going to launch a clearinghouse later this year. So there's this notion in securities law that you have clearinghouses, you have custodians, you have exchanges, you have broker dealers. These things are all separate. But look, I think that Coinbase's case is still going to have a lot of merit, which is that these tokens that you're saying are securities, maybe they were securities when they got issued, but they're no longer securities because they're more decentralized and trading in different ways. I think the SEC's case is quite extreme, with my perspective, in how far they're going and how many things they're willing to say are securities. So although EDX is taking the most conservative approach, I think what we'll see is that in the future, truth will lie somewhere in between. It's probably more than 4 tokens that you can trade, but less than 4,000.
So meanwhile, your company is the first life insurance operator that uses solely Bitcoin. And I just want to sort of start with asking, why Bitcoin for your business rather than some of the traditional holdings that someone would expect from a life insurance policy?
Yeah, well, why Bitcoin is, we believe, and I think a lot of our users believe, that when you look out 10, 20, 30, 40 years, that there's going to be a really robust economy in Bitcoin. And that will mean there's real economic activity. It's not just trading for dollars, but there are things that will be happening inside the Bitcoin economy. And that what will come with that is that Bitcoin will be worth a lot more money relative to the dollar or the euro or the yen. And if you're a person who sees that future and believes in it, we think there'll be, or we're building the life insurance company for that economy. And if you look at every economy in the world of any sort of maturity, there is a life insurance company, and life insurance companies do these really fundamental things of protecting you if you die young, helping you with annuities if you live longer than you expect, allowing you to have tax advantaged investments in most jurisdictions, and those and also ultimately hold a lot of assets, right? So what insurance companies do, in addition to protecting their users, is they also buy and hold sort of permanent capital, and I think that's a critical service that we hope to provide to the Bitcoin economy too, is to make long-term investments and help develop the space.
we started this conversation by talking about sort of the institutional space in crypto right now, and I want to wrap it up with that. You just raised $19 million in seed funding. How hard of a pitch was that to build a business around Bitcoin right now? This is a question I always ask companies that are building in this so-called crypto winter. What did those kind of conversations look like?
Yeah. Well, I want to say that we started from a place of believing that the value in the Bitcoin economy, the crypto economy more generally, over the next 10, 20, 30 years is going to be in people who can, in companies who can straddle that space between like what I'll call Bitcoin land or crypto land and like regulation land, right? So I think what a lot of our pitch came down to is we had done a lot of work, a lot of research in how to set this company up. And we, chose Bermuda because it's the insurance capital of the world. They're very well respected as a regulator. And that came with a lot of scrutiny, right? So we have an independent board. We have an enterprise risk management policy. We have all sorts of governance checks. And so when we were talking to investors, what we talked about is both that we look out and see a giant global crypto and Bitcoin economy. And do you agree in that future? We pointed to the fact that every economy in the world has every mature economy has a life insurance company that's about 2% of GDP is life insurance premiums in most countries. It's a big opportunity if you think that there's going to be a big Bitcoin economy. And then at the same time, that we're doing things the right way, we're getting regulated, we're going through governance. And with that combination of like this potential and the careful regulatory work, I wouldn't say we had the hardest, most difficult conversation. I mean, like we raised one round and it was like crypto summer, about half the money. And then obviously FTX happened and we entered crypto winter and we raised the other half of the money. And between those things, we obviously proved we hit a lot of milestones around our regulatory work. So we were able to like shift our valuation from one point to another. But some of the conversations, obviously for the second seed round, some people have just written crypto off. They've said like, this is no longer for me. But I think for a lot of the most serious interested investors, like Gradient, like Sam, like others, the ups and downs of the crypto market haven't changed their perspective on the long-term potential.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.